Welcome to Little Touches Real Estate. When most people think about buying real estate, they immediately think about banks, mortgages, credit scores, and large down payments. While traditional financing is one path to ownership, it is certainly not the only option. Today, we'll explore several common creative financing strategies that investors and homebuyers use to create opportunities when conventional financing may not be the best fit. Let's get started. Every property, seller, and buyer has a unique situation. Sometimes a seller wants to avoid a lengthy listing process. Sometimes a buyer needs an alternative to traditional financing. In other cases, investors are looking for ways to acquire properties while preserving cash for repairs, renovations, or additional investments. Creative financing strategies help bridge those gaps and create solutions that can benefit all parties involved. Seller financing is one of the most common creative financing methods. Instead of borrowing from a bank, the buyer makes payments directly to the seller. In essence, the seller becomes the bank. The terms are negotiated between the parties. This approach can create opportunities for buyers who may not qualify for traditional financing while providing sellers with ongoing income. Subject to involves purchasing a property while the existing mortgage stays in place. The buyer takes ownership and agrees to make the mortgage payments, but the loan itself stays in the seller's name. This strategy can be attractive when existing mortgages have favorable interest rates or financing terms. As with any real estate transaction, proper legal guidance and documentation are extremely important. Private lending involves borrowing funds from individuals rather than banks. Private lenders may be investors, business associates, friends, family members, or individuals seeking returns on their money. Because the funding comes from private sources, terms can often be more flexible than those offered through conventional lending channels. Many investors use private lending to buy and renovate properties. An equity partnership blends resources and expertise. One partner provides capital, while another brings experience, management, deal sources, construction knowledge, or operational oversight. Rather than simply lending money, partners share ownership, profits, and risks according to their agreement. When structured properly, these can help investors complete larger projects. Novation is becoming more popular in today's real estate market. In a novation, an investor works with a seller to rehab, market, and sell a property to an end buyer. After the investor recovers their cost, they split the profits. This can create opportunities for sellers to achieve a higher sales price while providing investors with a structured way to participate in the transaction. The methods we've discussed today only scratch the surface of many creative financing strategies available. Other examples are shown here. You should have a conversation with a financial professional to examine the merits of each. The right strategy depends on the property, the seller's goals, the buyer's objectives, and the specific circumstances of the transaction. Thank you for staying with us. Visit www.rcatbuyshouses.com to sell us your property or make a referral. Creative financing can open doors to opportunities. To learn more about creative financing, real estate investing, and market opportunities, visit our website, LittleTouchesRE.com, or contact us. Please don't forget to like and subscribe for more real estate content. Thank you for watching.